Good morning, metalheads. This is Brad with the No Bull Precious Metals Report for July 15th, 2021. And as expected, we have a whole lot to get through. There's been some crazy stuff that's happened today. So let's jump in. So, in terms of quick hits, we had several major economic reports this week or today that were coming out. I've been warning about them all week long, and we finally got to realize exactly what they are. We had, of course, our weekly jobless claims, new and continuing, but in addition, we also had the Import Export Index, the Philadelphia and Empire State Fed Index, which is produced by the Federal Reserve in each of those jurisdictions, and the industrial production and capacity utilization, which is coming out later today. All of those have some surprising results to them, so I will cover those in detail shortly. The big board is mostly down/flat. It's hard to really pick a direction on it. There's a lot of red and a lot of black, not too much green. Silver is still hanging on, although barely. It's not doing stellar, but it's still in positive territory. Gold is running flat to positive. I gave it an upward arrow just because it is doing pretty well, and it was earlier today. But as the day goes on, it's really hard to say where it's going to end up. Silver retail is still off, as we've seen on the average across the last few days. That I expect to continue until next week when we start seeing the positive results from what we had seen this prior week. Gold is still up, or gold retail is still up. On the big board, as I had talked about during the quick hits, we can see that there's a lot of red on the board. That's why I gave it that designation of mostly down and flat. We can see that even right now, although the markets still aren't open, it's about 9:08 a.m., we can see that they are still down. Even the Nikkei and the Euros are down. Most of the futures we're seeing are down. So energy is definitely a red sector. Grains are close to running even. They're kind of mixed between red and black and dark green. And metals right now are kind of doing a conversion. So gold, as you can see, actually went a little bit negative at negative 0.08%. Silver is still running positive at 0.07%. Platinum is at plus 0.05%. And palladium is 1.9% negative, with copper being 0.67% positive. So between all of those, we can see it's kind of a mixed bag in the sector. Who knows where the rest of the day is going to go as equities open up with the new revelation of reports. So we'll get to that now. Looking at the reports for today, we can see that we have our normal Thursday lineup, which includes everything for initial jobless claims. We previously had a rate last week of 386,000. That did decline to meet analysts' expectations of 360,000. Our continuing jobless claims were last week at 3.37 million. That's also declined now to 3.24 million for the July 3rd week. And remember, those are always week back. But the big news today is really where everything fell within the economic reports that came out. So the import price index was released first thing this morning. It was in the prior period at 1.4%. The median forecast was for a 1.1% increase, and it hit a 1% increase. But the big surprise is that Empire State Index. The previous period was 17.4. They were expecting a 17.3, and I actually checked this out a couple of times. The actual number reported came out to 43. That's huge. And what exactly happened is all of the index itself is comprised of a number of different subcomponents. So those cover various aspects of the manufacturing industry, and especially as it pertains to this specific federal jurisdiction, or the Federal Reserve's jurisdiction, I should say. In the Empire Survey right now, and I'm actually reading from a Market Watch article on this because they did the first analysis. In the Empire Survey, the subcomponents are strong. The new orders index rose 16.9 points to 33.2 in July, while shipments rose 29.6 points to 43.8. The index for number of employees rose 8 points to 20.6. Inflation pressures remained. The prices received index rose 6 points to 39.4, which is a new record. The prices paid index slipped slightly, but also remained near its record high. So what this means is that everything was significantly stronger than what was expected, all the way from the new orders to actual shipments shipped to the prices charged and prices paid. So looking at that is definitely a bit of an anomaly, especially when we take one look down on the Philadelphia Fed index. And we can see that the prior month was 30.7. The analysts were expecting a 27, and we actually got a 21.9. So speaking as a New Yorker, I don't know what's going on with the Empire State Index. However, it's definitely different than just across the border in Philly. The two that we're waiting on still is the industrial production number, which I kind of jumped the gun on getting this report out. We don't have, and the capacity utilization rate. Both of those are going to be critically important as we start looking at what's going on for the general view of industry and manufacturing, especially into the day and the rest of the week, because those are really going to set the tone in terms of what we're doing, how we're doing it, and how the market's probably going to react to that sector. Now, at 9:30 a.m., we have Fed Chair Jerome Powell, who's testifying, which is always exciting and tends to give lots of strength and happiness to the market. That is sarcasm. And at 11 a.m., we have the Chicago Fed President, Charles Evans, who's speaking. Now, to round out our current economic indicators, let's take a look at the 10-year Treasury rate, because that's also very dependent on what's going on in the world today. And as we can see, we've had this continuous bottom that we reached on July 8th, where we had that close of 1.29. It popped up to 1.35 on the 9th. On the 12th, we saw a 1.36, followed by a 1.38, so we were on that ascendancy. And then on the 14th, yesterday, we saw a close of 1.37. Now, as I had discussed earlier, the unemployment numbers that we had took some decided turns this week. So I just wanted to give a quick second so that I could kind of highlight exactly what's going on. You can kind of see the trends of how they're occurring and make your own conclusions. And through this, we can definitely see that there is a downward trend, and especially between last week and this week, and even from the prior week from June 26th, we look at that, we look at June 3rd, and we had that bump, but now we're even lower. So we're 8,000 lower than what we were at the prior low, which is a good direction. It's something that definitely, we can't take it away for what it means. People are starting to go back to work, or at least in this particular instance, not necessarily going to work, but not losing their jobs as fast, which is a good thing. Now, as we start looking at continued claims, we can see that same decline as well. Now, mind you, the basis line on this is 3.2 million, so we're still quite a bit higher, and we're still at 3.241 million, but we are in a steady state of decline all the way from on June 19th, we had 3.48, and last week we had 3.36, and now we're down to 3.24. Now, this is an indication that workers who were collecting unemployment are coming off the rolls, which again is a signal of a somewhat strengthening economy. And I use that term very, very, very carefully because, as we know from the other reports, there isn't a significant amount of strengthening that's going on. Here is the surprising chart that we have today, which is the Philadelphia Fed and Empire State Manufacturing Index. And I made the choice of plotting both of these on the same chart. One, to save space. Two, to also see what two concurrent regions are looking like using a similar index. And as we can see, Philadelphia is at 21.9. The Empire State Index went up to 43. And these are significant because really since September, September was the last time when the Empire State Index was running above the Philadelphia Index. And we could see that the Empire State Index was very low. I mean, all the way down to 3.5. And of course, that discounts all this negative prior to that. But we can see that the steady incline, we had some declines, but Philadelphia was almost double of where New York was at that point, as early as April. And now we've definitely crossed over with authority. So it's very interesting. We've definitely doubled over, and moving into it could signal strength, but it's really hard to say where it is. But people are going to be talking about this, and I think it's important that you understand what's going on. So let's talk about the markets. First up is the silver futures. Now, what I'm going to do, I'm going to dive in on this one from the 13th on, just so we're only looking at a couple of days. I've covered the previous aspects of it. And we can generally see that the price is currently rising up, that we do have this trend that began, I'll say back on July 13th at around 8 p.m., we started seeing this general trend that was going up. And starting from there, we can generally see this is how the movement's been. As we start getting into that, we did yesterday, around midnight, 12:30, somewhere around there. We had the movements that I talked about yesterday. We went all the way from our highs in the morning. It took us pretty much all morning long into about noon to get down to the lows. But then we started this ascendancy period. And we did that until around 6 a.m. this morning when we got back to that 2642. And then we took a dive again. We have this nice little cup that's kind of forming. But we are on the ascendancy. As I just kind of peek over at the board, we're up about 5 cents right now again. So that's a good thing. And we're continuing to move up. Now, as we start to apply the previous day VWAP, we're right in line. We're seeing the price that's starting to meet with that. And as we look at the intraday, we still have a little bit to go, but we're kind of getting towards that neighborhood. So that's something that we can watch throughout the day and see where things react to. And actually, because the intraday is at 26.38.7, the current price is at 26.40, we're actually just peaking above the intraday VWAP. So interesting movements. We'll have to see where it goes, and especially after Chairman Powell speaks. Our gold futures, let's dig into those in the exact same way that we did with the silver futures. And zooming in for a 2-day view, we can see the same general trend that we saw with silver. We do have that overall ascendancy feeling. We're not in a period of decline. And although there's a lot of churn within this, there's these flat spots, kind of, as we start to look at this, we are seeing a definite upward swing. So if you just kind of, blur your eyes a little bit and cock your head, You can definitely see where these things aren't perfectly level. They're not perfectly flat. We're not just in an oscillating period where the prices are staying exactly the same. We are seeing that there is ascendancy. So looking into that, we're kind of getting that same period around 6 a.m. this morning. Basically, the metals traders decided that they wanted to do a sell-off, and so they did. And it cost, a few dollars. We went from 1832 down to 1826. Not significant in terms of the overall cost of gold or the price of gold, but just enough. And then we just kind of went to this flat motion for right now. Gold is currently at 1825, so it's riding about $1.10 above where my board is frozen at. So it's not significantly high, but it's still decent, and we're seeing kind of that same trend. Now, the interesting thing will be for me to watch whether this is going to continue to oscillate or whether we're going to see some directional movement, either up or down. I'm going to say that probably the way that things are shaping up, we're going to see a little bit of a decline for right now. And depending on what Powell has to say, as well as what the other reports are saying, I'm kind of guessing towards the negative side of things. I don't see a lot of gains today. I hope I'm wrong. Now, just to reinforce what I've talked about for the other two charts, I've pulled up the 5-day performance comparison, and we can see that both silver and gold have had some interesting changes over the last 5 days. Yesterday, you might recall that silver was actually doing pretty good, but today gold is doing a little bit better. Where gold is at 0.98%, silver is at 0.53%. So we're still definitely in positive territory. And the gold silver ratio on the actual market to market price, we're seeing the gold silver ratio is at 69.37. And again, I generally don't like it when it starts getting near 70. 70 is one of those psychological thresholds. So I like to see it a little bit lower. However, this retail to retail price, which I figure out using the average price of 1 ounce of generic gold versus 1 ounce of generic silver based off of my data collections, is currently at 60.95. There has been the softening of retail silver that I've seen across the 3-period windowed average. We can definitely see that as we look at the 1 ounce generic. We started out 2 weeks ago, 31.48. This week we're at 31.35. So there's even a decline not only from last week, but also from 2 weeks prior. And we're mostly seeing that across the board, although, the Canadian silver or the Canadian maple leaf, that's actually flat from 2 weeks ago. We had that slight hump in the middle, but 35.72 to 35.72. The American Eagle, we started out 2 weeks ago, 41.99 on average, with a 41.8 this week. So we definitely have had a decline over the last 2 weeks. And even on the 10 ounce bars, we're seeing 2 weeks ago was 30.92 per ounce. This week we're seeing 30.75 per ounce. So if you're looking for a deal, this is a great time to buy, especially given the prices, the movement, the directions, everything else. This is a great buyer's market because there is a lot of fear and hesitancy. There's a lot of uncertainty within the market. So there are some sellers, especially on the private side, they're just looking for a deal. You're going to wind up with the nervous people who are trying to bail on physical silver, but that just presents buying opportunity. You can get more for your money. Even on the major distributors and that level of retail, we can see that even the prices are a little bit depressed. So if you happen to have a coupon, if you happen to take advantage of any of the deals, anything like that, these are good times to purchase. Retail gold, as I had mentioned previously, is up We can see that pretty dramatically across the entire range of all of the items that are displayed. We can see this ascending step, even on the American Gold Eagle, the 10th ounce, we're at 27.16. The 1 ounce generic, we're at 18.97, which is an increase from 2 weeks ago from 18.63. So that's $34 and some change. So we are definitely seeing this across the board, and I'm not immediately seeing anything that's off. The only one that I will notice is the American Gold Eagle, which had that 2 week ago price of 1963. It then went down to 1960, and now it's back up to 1985. So that was the only one that really maintains that shape. We are seeing retail gold is holding strong. In fact, in the face of declining spot price, we're seeing these prices are still continuing to creep up. Not real fast, but just fast enough. So there is strength in the gold retail market. If you're looking to get into gold, it's not necessarily a great time, as we've kind of sussed out here. It's not a great time to do a conversion from from silver to gold, because the ratio is really just, they're not in our favor. However, if you have spare cash and you want to diversify into it, it's not a bad time, because even the 3-week trend on this has shown that the prices are increasing. And I don't necessarily see any signs that it's going to stop in the near future and could actually increase. If you're going to get into gold, as I've pointed out many, many, many times, don't get into this fractional stuff. Just zooming in on this, 27, 16, 30. And that's for a 10th ounce. So if we divide that by 10, we can see that the unit price is $271 for 1/10 of an ounce. That's tremendous premium. The actual spot price of gold right now is $18.26. So we're looking at almost $900 worth of premium on if you're going to buy 10th ounce American Eagles. I know that not everyone has enough cash to just run out and buy an ounce. However, it makes a lot more sense, and you'll get better return off of it if you save up for a while, and if you purchase one, or if you buy, say, a 1/2 ounce, or something that gets closer to that 1 ounce, because the smaller the gold, the larger the premium. And especially, on this premium gold, like the American Gold Eagle, the Gold Buffalo, things of that nature, you're going to wind up spending a much bigger premium on it. So you have to buy smart. You can't get out of a bad trade or a bad investment if you get into it bad. It takes that much longer, that much more effort, everything else. And oftentimes the effort involved in getting out of it like that is what's going to, make the investment not worthwhile in the long run anyway. So with that, I'm going to call it a day. We're going to have to see how the markets move, where everything goes, and it'll be interesting to say the least. So if you like what I have to say, feel free to like, share, and subscribe to content. This it helps out what I'm doing, how I'm doing it, gives me some motivation to keep going, all that good stuff, blah, 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 whatever. If you are interested in supporting this channel at all, please check out my ebook on stacking silver, which is a market-based approach to silver and silver markets. I have a link to that in the description. And until next time, happy stacking.